Namaste dosto, welcome back to Trading with Hariom. Today we are going to talk about one interesting sector and that is paint industry and a rising company in this space and that is Indigo Paint. But before we talk about this company, let's understand why this industry has so much potential in India. In India, paint is not just for the walls, it's a sign of progress. When people build new home, renovate or the repaint for the festivals, they use paint. More income, more painting and more growth for the paint companies. But how much do we really use? Let me tell you something very shocking. In India, per capita paint consumption is around 4 to 5 kg per person per year. The same number in the USA is around 15 to 20 kg per person per year. The gap is around 4 to 5 times. Huge gap, huge opportunity. The India grows richer, this gap will reduce. Now let's talk about why this industry is booming in the future. India's real estate and housing sector is growing. People are shifting from whitewash to quality paint. Rural demand is increasing. Paint is used for decor, waterproofing and protection. This means more people, more uses and more business. But now comes a question. If the future is so bright, then why are the major paint companies like Asian Paint, Berger Paint and Kansai Nerolac down recently? Well, there are two big reasons. Raw material cost increasing and the second one is heavy competition or the sentiment. Paint is made using chemicals and crude oil byproducts. Crude oil prices went up sharply and that made raw material more expensive. And because of that, profit came down for the major big companies. But now the crude oil price is easing. New companies like JSW Paint and Grasim Paint have entered the market. This has created the pricing pressure and affected the margin of older big companies. But the Indigo Paint is handling this smartly. They are more focusing on unique products like floor paint and ceiling paint and even spending well on the advertisement and even using celebrities like Mr. MS Dhoni. Why Indigo Paint is growing while others are struggling? In the last 1 to 2 years, the entire paint industry is faced a slow demand. Big companies are struggled to grow their sales. But Indigo Paints managed well and grow its profit up and maintains a strong margin even in this tough time. The company's gross margin stood at more than 40%, which is one of the highest in the industry. While other companies are reduce their marketing spend, Indigo Paint continue to spend 6% of its total revenue on advertisement and digital platform. The company focus more on premium products like emulsion paint and waterproofing chemical, which gives more profit. Along with that, the company expanding its dealer network and expanding the tinting machine in the different towns. Management is confident that from the second quarter of FY26, demand will come back and Indigo Paint will grow strongly with the double-digit number. Now I'll discuss business model. Indigo Paint is one of the top paint company in India. It makes different types of decorative paints that people use in homes and buildings. The company became famous while launching new and unique products like tile coat emulsion and metallic emulsion. In some special product category, the company holds 80 to 90% market share. It means that the company is leader. Indigo Paint has a 5 manufacturing plant. The company recently launched its new plant in Tamil Nadu, which can make 50,000 kiloliter water-based paint every year from this plant. Apart from that, it is also building a new plant in the Jodhpur, which will start in FY25. Indigo Paint also entered into the new business area, waterproofing and construction chemical. The company recently acquired 51% of stake in Apple Chemie. Apple Chemie continues to sell to a big builders and infrastructure companies. This new business is already growing fast. Now discuss financials. The company's market cap is around 6,000 crore, which makes it a mid-sized company in the stock market. Its price to earning ratio is close to 40, which means investors are expecting the future growth. The industry average PE is around the same, so the Indigo Paint is trading slightly below that. The company has a ROCE of 19.5%. This shows that the company generates profit well. Apart from that, the ROE is 14.7%, which means that the company is giving a decent return to its shareholders. Its debt to equity ratio is just 0.02, which means Indigo Paint is almost debt free. And for that, it makes a financial safe. Indigo Paint reported its highest ever sales in March 25, which is 1277 crore. This shows that the company is growing even when the industry is facing the slow demand. In its net profit for the FY25 was 144 crore, which is the second highest ever profit ever in the company's history. So even with the tough market condition, Indigo Paint is making the solid profit. The company is also investing in the future growth. Its fixed assets have almost doubled from 265 crore in March 23 to 556 crore in the March 25. This shows that the company is building the new plants and expanding capacity to be ready for the higher demand. Another good point in the shareholding pattern is that about 85% of Indigo Paint shares are held by strong shareholders. These include promoters and long-term institutional investors. Only 15% are in the weak hands, like short-term traders or retail investors. This means that the stock is mostly held by people who believe in the company for the long run, which gives its stability and strength in the market. Now discuss technical. Since its IPO, the stock has not performed well. From the time it got listed, the price has fallen by around 63%. That means that if someone has invested 1 lakh rupees during the IPO, its value today would be only around 37,000. So the big part of investors' money has been lost. If you look at the chart, the stock is stuck in the range. Since March 22, Indigo Paint is trading between the range of 1000 to 1500. For more than 3 years, it is moving up and down in the same range. This is happening even after the company posted great profit and strong sales. So the question is, why the stock is not going up and even when the business is doing well? It could be due to the weak demand in the paint sector, or maybe investors are waiting for the stronger sign for the growth. But now I want to hear from you. Please let me know in the comment below, will it break from here or will it remain the same? So this was the full analysis of Indigo Paint. If you found this video helpful, please hit the like button, share it with your friends and subscribe to Trading with Hariom for more in-depth stock analysis. And please let me know in the comment below which stock you would like me to next analyze. We'll back in next video. Till time, happy investing.